All right, welcome back. Today we got a stock market update as well as we're going to talk about NVIDIA earnings. So let's get that out of the way first. So NVIDIA reported their Q1 earnings this afternoon. Blockbuster numbers yet again. They came in with a revenue of almost $82 billion, and most of that is the data center, $75 billion for just this past quarter, and that's nearly 2 times more than what they did last year in Q1. So just again, this company continues to accelerate growth, not slowing down at all. Their gross margin is 75%, and they beat across all metrics. So great quarter overall. Some of the other big news that they announced, they're going to do an additional $80 billion of stock repurchases. So they're going to buy back their own stock. They got so much free cash flow. They don't know what to do with it. So the last handful of quarters, they've been placing investments into OpenAI, Anthropic, some of these, cloud companies like CoreWeave. But it seems like they're done investing in some of these other companies, and now they're just giving that cash flow back to their shareholders. So they're doing a much larger buyback than they've done the last handful of quarters. And they also are announcing a 25-cent share dividend. I think it was 1 cent dividend is what they had, so now they're bumping it up to 25 cents. So that's a nice chunk of change that's going back to their shareholders. So great quarter here. I listened to the call about an hour ago, and they're just winning the race on all fronts: GPUs, CPUs, software. So can't say anything bad about this company. They just continue to accelerate. And still seems like we're early innings here. Now, when will the growth slow down? I don't know, but I know it's not going to be next quarter because they guided for $91 billion for Q2. The estimate was $86, so they just keep chugging along, keep making more and more revenue. And this company is starting to feel like it's becoming the next version of Apple. So Apple they grew at a tremendous pace. Ton of cash flow, bought back their stock, and eventually they kind of petered out. Where Apple right now, they're kind of flat when it comes to growth, but they're just milking that cash cow. I think NVIDIA is going to be a similar play. The question is going to be, when do they start to plateau? And is that a year from now, 5 years from now, 10 years from now? We don't know. We're still so early in this AI race. We don't even have the robots yet. So go talk to most people. They're not really using AI that is super compute intensive. Once we get to 10% of the population really doing compute heavy stuff, and robots start to come online, I mean, there's such a demand, and there's going to be such a need for more compute until we really figure out a new innovation to make tokens cheaper or more efficient. But we're a ways away from that. So NVIDIA's still got a nice runway ahead for the next couple of years. And this company is just firing on all cylinders. So A+ quarter for NVIDIA, nothing new. They just keep dominating the game here. All right, so now on to the market update. So we've got oil prices over the last couple of weeks have spiked back up a little bit. And the big news is going to be the Treasury yields. So this is our red market.
Order filled.
We are in danger territory when it comes to interest rates. We'll take a look at the charts here. But this is not good news at all. So the market is still holding up fine. We had CPI and PPI the last couple of weeks. Terrible numbers. Inflation's coming in super hot. Oil's high. That's not good. And the bond market is pricing that in with higher interest rates. We do have the new Fed, who I believe started this week. Jerome Powell is done. But he can't cut in interest rates because the economy is doing well, and inflation is high. So this is not what we want to see. We don't want to see the market pushing interest rates up because this could be a headwind for the market. But AI is still so strong that it's keeping the market afloat for now. But it is taking some of the wind out of the sails when it comes to the AI boom that we're in right now. So we'll have to wait and see when this gets resolved. Let's go ahead and take a look at some of these charts. So we normally look at the 10-year yield, which is what we're looking at right now, and we don't look at these charts often. These lines that I've had on here have been here for a very long time. So it's just interesting to zoom way out. So if we look at a monthly chart, interest rates just dropped all the way down from 16% all the way down to 0 during the pandemic, and then we've crept back up. And this is the danger zone where once we start getting above this red line, we don't want to see interest rates moving above this. This would be not good at all for the market. We were hoping to see us fall below this green line, and we are getting so close. We were so close at the beginning of this year, and then things happened, and now here we are near the highs. And when we look at the 30-year yield, this line has been here for a very long time. I don't look at the 30-year yield too often, unless I'm trying to figure out what's going on with mortgage rates, because this is what mortgage rates are based off of. But we are in the danger zone here. We do not want to see the 30-year yield stay above 5% for a long period of time. So we'll have to wait to see, what brings interest rates down: slow growth, recession, or deflation. So we need to see one of those, and only one of those is necessarily a good thing. Is inflation coming down or deflation? We don't want to see a recession. We don't want to see a slow economy to bring interest rates down, but that may be what we need to bring interest rates back down. So not good news here. Let's take a quick snapshot at oil. We're just hanging around this $100 level. I'm in California. I saw $8 diesel prices today, $6.50 premium, $7 premium. So, that's not good news either, but it is what it is. We'll see where we go from here. Let's take a look at NVIDIA. After today's earnings, it is flat. So it's up 1.5% during the day, and it is down 1.5% after hours. So NVIDIA tends to run up before its earnings because all of its customers are reporting earnings. Google, Amazon, Microsoft, Meta, all its customers are reporting earnings and how much they're spending. So the market kind of prices in what NVIDIA does before they report their earnings, and typically get a muted move, just like we saw today. But we did hit all-time highs at 240 the other day, so that was good to see. Other names to talk about, I think the interesting names are CrowdStrike. We made a video on CrowdStrike and the cybersecurity names maybe a month or so ago when they were getting destroyed because of the AI narrative, which made 0 sense. And it looks like Mr. Market agreed with that sentiment eventually and bought the dip here, because a lot of these cybersecurity names just booming. Palo Alto Networks as well, and Fortinet is the other one. So other than that, these AI names are still doing very well. Micron had a pullback but bouncing back. SanDisk, same thing. A lot of these charts look very similar. Bloom Energy, you get a small pullback, market buys it up. Where's AMD? Yeah, so we're going to see these large pullbacks, but I expect these to keep getting bought up. The hardware story is still alive and well, especially after what you hear from NVIDIA. These numbers are going to continue to climb. Seems hard for me to chase a lot of these hardware names. I do think there's some interesting other bottlenecks when it comes to the AI build out. Some of these names, they still have run a lot that are in the component sector. They look a little bit better. They're not so parabolic. And then also the power generation. So a name like Bloom Energy is in the power generation for these data centers. It's moved up quite a bit. But I think the story is really good. Another name is Constellation Energy. This one's down quite a bit. I was taking a look at this over the weekend and still need to do a deeper dive, but I still think there's some plays to be made in the AI build out that aren't your big names like the Amazons, NVIDIAs, Google. And I do still highly believe that Microsoft is the value play to be scooped up here, and eventually Meta, I think, will find its way in the portfolio over the next year or so if we stay down in these prices. But other than that, not a whole lot to update you on. We are basically through earnings, and now we just need to wait to see what interest rates do and what oil does, and that should be the next catalyst for the market, as well as the new Federal Reserve. The market tends to test the new Fed chair whether it rips or crashes, it tends to give the Fed chair a little test to see how it's going to respond to market moves. So maybe we'll get some volatility there. But we are also coming up into the dog days of summer. Everyone steps away from their desk. We got Q1 earnings. We're in the middle of Q2. So there's not a whole lot of news necessarily over the summer days. So over the summer, we'll do a deep dive in some of these AI infrastructure names. And if I see something interesting, I will bring you guys videos on that. All right, guys. Well, I'm out this weekend. I will see you next week. Peace out.